Right, good morning. Today is Wednesday, December 6th, and I'm back with another edition of the Wednesday Live Show. And not a whole lot going on, I suppose. If you look at the overall market, it's kind of since Thanksgiving, it's kind of been just a little bit of some sideways price action without a whole lot of excitement or action. And this is always a weird time of the year around the holidays. People are doing all kinds of stuff. And of course, as we've talked about, the market is seasonally speaking, is strong this time of year. But man, we had such a run up in November that things kind of seem to be leveling out here. And I wanted to show you. First, we'll zoom in. I guess we could we'll look at SPX here. I had the SPY up. Um, Down at the bottom of my chart, and I don't want to skew all my charts, so I'm gonna pull this up, and then I got to remember to bring it back down. But as you can see here by this little bottom panel, the market's just kind of been going sideways, right? And so you can see that the MACD, down here at the lows, the MACD crossed back up, and there's the 200-day moving average. This was sort of this little dip below the 200-day there was when things were looking pretty rough, right? And then amazingly enough, and amazingly enough, November was just an incredible month. And I think a lot of that is partially due to the fact that everybody expects, I don't say everybody, but the consensus now, the market expects that the Fed's going to start cutting rates, which I think I saw this morning that, the market's pricing in like six Fed, quarter point rate cuts next year or something like that, which seems ridiculous. I mean, it's pricing in rate cuts as soon as the first quarter, which just doesn't seem logical, to be honest with you, because the last thing that they want is a resurgence in inflation. So anyway, the point of this little chart here is to show you that after the big run up in November, the market's kind of stalled out a little bit here, and you can see by the MACD that the that that the inertia, I guess I should say, to the upside is sort of waning here, right? So when we take a look at a bigger picture, all right, so this is where I want to fix my chart so that all the rest of my charts look good. So let's see here. This is the chart that I start on, is this big support and resistance area here. Zoom that out a little bit, and down at the bottom of this, oh, well, this one's skewed a little bit too now. Let me move that up there. Yeah, that's one of the things is all my saved charts. I have to have them configured identical. Otherwise, when I switch from chart to chart, like the screen doesn't look right. So I'm gonna have to wing it now because that one was supposed to show the years. Oh, anyway, so last time we were on here, this is kind of just reiterating what I said. Last time we were on here, I was talking about how the market had poked up into this resistance level, which seemed like a fairly logical place for it to sort of stall out and either reverse or consolidate or whatever. And so you can see that over the past couple of weeks, we're just kind of in a like real tight little narrow consolidation. Interestingly enough, if you look right here, you can see that, and this is a daily chart, of course, there's not a whole lot of time left in the year, right? So um, I was almost going to start the show on the weekly chart because, and let me pop over to that because that's the one that's going to give us a little bit bigger of a picture. And so you can see this trend line here. Last week when I was doing it, we were actually poking through it. This week is it's another really narrow range week. So the past several weeks, and of course, Thanksgiving was in here, and Thanksgiving was basically like a 4-day weekend, and seems like ever since we got back from Thanksgiving, things have been relatively dull. which doesn't surprise me. I mean, this time of the year, people are doing stuff. I know I've been busy doing all kinds of things, and I still have a lot to do, and so it just is what it is. But anyway, so you can see that the market's kind of stalling out right around here. Even if it were to rally up in the next couple of weeks, it's going to be interesting to note that, I mean, as we are right now, at the level we are here, it's the same level as it was 2 years ago, which is kind of interesting, right? I mean, look at December, look at the end of the year here, the last few weeks of 2021, and basically around, but spent most of December like around the same level it was now. So it's kind of crazy to think that, that 2 years ago we were at around these same levels. And, it's been a pretty wild ride since then. A lot has happened, but it's kind of interesting. So, um, I talked as this pattern was sort of developing over the past, year or so, even back around, spring of this year, I talked about the cup and handle and the idea that, it's kind of shaping up to be sort of a cup and handle, and it is. It still is on the weekly chart. So you can see there's the big sort of cup and there's the handle, right, from summer to right at the beginning of November, and it's trying to break out of it, but it makes perfect sense that it would sort of stall out around this level here, because I mean there's just a lot of resistance there, as we can see from from the other charts. So the MACD is kind of going negative here on the daily chart. Let me zoom this out a little bit. This is kind of this is my real clean daily chart here with basically just 50-day and the 200-day. Let me pull this up again so you can see what that MACD looks like zoomed out. Look at this. Kind of interesting. I mean, as we speak, I'm starting to see a little bit of negative there on the MACD, even though the market gapped up, the S&P, I should say, gapped up today and has kind of been, drifting down a little bit. But you can see pretty clearly, this whole since around Thanksgiving, how it's just stalled out here, right around these prior highs from the highs over the summer. And then of course, if I drag it way back here, you can see that there's lots of, from back around the beginning of 2022, this is a significant resistance level. So I'd be kind of surprised if it just broke out and ran straight up to new all-time highs before the end of the year. And then of course, who knows? There's always a lot of weird stuff that goes on this time of year. You got tax loss selling, right? And you have a lot of people that don't want to sell winning positions because they don't want to have to pay tax on them, right? And so that's always a big battle in December. If somebody's got a stock that they've been holding during the year or holding for years and years, then now's not the time to sell it if it's a big winner, because if you simply wait for another 4 weeks and sell it at the beginning of the year, then you don't have to pay tax on it, on the capital gains, for until 2025. So that's sort of the big battle. And then of course there's the tax loss selling. So earlier today I went back and I zoomed my chart back just for the fun of it. You can zoom back, and I just looked at the last previous Decembers. There's December of last year. The market had there's the big bear market low, right? And so the market had a pretty decent run up in November, and then to end the year sort of with a bang, had a fairly significant sell-off in December. Now, of course, I don't remember what the actual news is. And then, of course, you go back. It's kind of neat that you can zoom back like this on these charts. And then, so there's, December 2021. it was pretty wild. I mean, these are, if you look at the days here, these are some pretty long range days. So, oh, I don't want to forget to pull my chart back down. So anyway, it was just kind of interesting to look back at all the other Decembers. Um, so let's look at the other indexes here. The Nasdaq. Oh, I wasn't sure. I guess if I just type a symbol in, there we go. If I just type a symbol in, I got to zoom it back. Nasdaq. Yeah, I'm starting to get where, the daily charts are really noisy, right? We all know that. So I'm starting to get to the point where when I'd like to sit back and kind of see what's going on, I'm gravitating towards the weekly charts a lot more. So I don't look at as many daily charts. Same thing here on the NASDAQ 100, the big giant cup and handle, right? And then interestingly enough, like this gap here kind of is kind of unusual. And I don't, quite honestly, I don't really remember. It hasn't been that long ago, but there was that sort of breakaway runaway move there, and I don't really remember what the that was all about, other than like I said, the big sort of consensus now is that the Fed is done hiking rates, which remains to be seen. I mean, most likely the inflation rate has slowed down considerably, and it's still well above the Fed's target. And the funny thing is that it's like the market doesn't believe what the Fed says, right? It just seems almost ridiculous because, I mean, they've basically, I can remember a couple of times last year, not even 2023, like 2022, I can remember when, we'd get like these rallies based on, what they would say the Fed pivot, right? And so, um, and if the Fed kept coming out and saying, that they were not going to pivot, and until they hit their 2% inflation target, obviously, and there's no reason to pivot unless the economy starts slowing down and the economic numbers get really bad in that. So it doesn't seem like, and it's hard to say. I mean, as I talked about this last week, it's all subjective and debatable whether the economy is strong or whether it's weak, or the strength of the consumer and all that. But the fact of the matter is that it's basically the Fed and the government's fault that inflation ramped up and got out of control. And then, as I always say, the inflation damage has already been done because the price level, the general price level of everything, since back here, since right after the pandemic or right around the pandemic, or you could take the pandemic high right here. Anyway, this pandemic, and then the Fed throwing 6 trillion or so dollars at it. Now we find ourselves here, and everything's more expensive. I mean, I go to the store and I buy the same stuff that I was buying, back here. And of course, everything's gone up. Home prices, rent, everything is more expensive. And so, like I say, if if inflation came down to zero, that doesn't mean that anybody's lowering prices. So, um, companies are still raising prices, which is kind of crazy. And so, I mean, I think, like all the streaming services, they've raised their prices recently, and restaurant prices are pretty crazy these days. And so, there's two economies going on. One where, people are struggling and everything's more expensive, they have less discretionary income. The one sort of bright spot here is the price of oil, right? And quite frankly, I mean, the price of oil, geez, I saw it, and I don't know if this chart's like today or yesterday. Let's look at the weekly here. Price of oil, amazingly enough, is, well, it says 72 here. I could have sworn, and that's probably yesterday's closing price or whatever. So, but I thought I saw when I looked over at CNBC earlier today that it was just around 70, like it was down again. So every time I look over there, they have their little bug or whatever, and when I want them to show something like oil, they don't. But anyway, I mean the good news here, right? The good news. Let's zoom this back. There we go. $70.50, right? So, I mean, it's even down a couple of bucks from here. So let's zoom back to the pandemic sell-off there, right? Look at that. Um, yeah. So here's the thing. The Russia-Ukraine thing back here at the beginning of 2022, I believe it was. That's when everybody was like going crazy about oil, and that probably, you know, I mean, that probably did contribute to a little bit of the inflation. But the good news is that oil now is kind of settling down, right? I mean, if you think about it, it's the same price as it was a couple of years ago, just like the market, right? So I mean, as long as oil stays roughly in this area or whatever, it's not going to contribute to inflation. So that's sort of one of the bright spots there, I suppose. Um, it's a tale of different markets. We looked at the S&P, we looked at the Qs. I mean, the Qs are just banging on, new all-time highs. The Russell 2000, which is an extremely interesting index. I did see a chart today that said something like tech stocks relative to the Russell 2000 at their highest level ever as far as performance, as far as like if you compare the ratio of technology stocks, it's like past the the dot-com bubble of 2000. So we've been looking at this chart for a long time, and basically there's the most interesting thing about it, I guess it's time to extend this out into the future. And I don't want to mess this up, but I'll extend that one out into the future too, and then, or at least a little ways, maybe a little further. But there we go. There's the major support and resistance. And let me save this. Can't forget to save it. And so there you have it. The Russell 2000. And surprisingly enough, I mean, when we were here last week, I was talking about how, Russell was about halfway. And that's usually about where it stalls out, but it's managed to push about 3/4 of the way up. So if I change this to a weekly chart, and zoom in on it, it's a little bit cleaner, but actually, it's a lot cleaner to look at. But the whole idea is that it's just cycling between like the support and resistance levels, and then once it hits either the support or resistance, starts moving the opposite direction, it just kind of tends to keep going. So that's pretty amazing, right? I mean, yeah, it could stall out a little bit here, but it kind of looks like it's headed back up here. And so you got to wonder if like there's some rotation going on or not, but clearly that there's some buying of the small caps. But I mean, even if like in January or February it managed to tag the top of this channel, hey, the perspective on that is you got to go, look at where the highs are. That was incredible. And quite frankly, I mean, 2021 was like sort of similar in a way, as to what we've seen the past couple years here with this thing just bouncing up and down. But the Russell 2000 doesn't look like, all-time highs are in the cards anytime soon. And I mean, if you look at this chart, I mean, we're going back years here, right? So amazingly enough, and this is probably the most interesting thing about the Russell, is you'll notice that the this big support area here that it miraculously keeps bouncing off of is literally the highs right before the pandemic. That's the most interesting thing about that. I mean, clearly, it's kind of it's just textbook. I mean, clearly it makes sense, but in a way, I suppose, but it's textbook, and it's just amazing how symmetrical the pattern is in the Russell. That doesn't necessarily mean that it's a straight shot. You can see that all the times where it hit the bottom, prior to, I guess this time back in earlier in the year or whatever, from the top, it didn't quite touch the bottom, but it spent a lot of time just going sideways. I mean, this is, several months here of doing nothing, right? So this time it's a little cleaner. It's more like the pattern is a little bit more like 2022, where it kind of, went from the top to the bottom and then reversed and then straight back up. So pretty amazing, quite frankly. And of course, this is the time of year where small caps are in favor. So anyway, like I said before, there's not a whole lot of really exciting stuff going on. I always like to look at ARK, right? I think I look at ARK like every time we do the show here, just to get sort of a gauge of animal spirits and what the momentum in, I guess you could say, like the growth stocks, right? Growth stocks, or the fad stocks, I suppose. Well, I don't know if I'd call it fad stocks. I mean, the stocks that supposedly, like this ARK Innovation Fund is investing in companies that are, high growth stocks, right? Anyway, long story short, it doesn't look all that exciting from this perspective. Although, if I drew like a little box around here, you kind of get. So I will draw a little box. I mean, kind of like the old Russell 2000 there. Well, that's kind of cool. It kept my little shaded box. That's kind of neat. I don't know if I like that fill color. Let me fill it like that. Yeah, that looks a little bit better. I'm gonna save that just for the fun of it. Oh, jeez. Now it's gonna duplicate this in my watch list, but that's okay. Anyway, yeah, it's kind of cool here. So let's zoom in on this a little bit. Still doesn't look all that exciting, but quite frankly, I mean, and there's the 200-day moving average, but quite frankly, I mean, that's kind of this is a bottoming pattern that should, provide some hope to people that maybe are in these kind of stocks that that are looking for them to. And of course, this is a weekly chart too, so it's a lot cleaner. But yeah, this what's amazing about this is this current sort of run here, right? From $34 almost up to 50. And so, there's a couple of pokes up here. It's debatable, like maybe the top of this box would be, up here or there, but for now anyway, I'm gonna use this most recent high. I guess I'm gonna need to save this again. I'm gonna use this most recent high here as sort of the top of the box, just for the fun of it, and keep an eye on this, right? So I probably should have extended this out into the future, but that's one heck of a bottoming pattern. So, and I'm seeing some other stocks. There was one, we used to look at this Shopify quite a bit, and of course this is a weekly chart. So let me flip back to the daily chart here. The daily chart on this, it had a similar sort of, I mean, we talked about this last year, like a similar sort of bottoming pattern. And of course, the earnings, it was kind of a mess and this and that. But basically back here, it had a very similar sort of, well, of course I didn't want to do that. Very similar sort of bottoming type of pattern, right? That eventually it emerged from, and you can see, it's kind of on the comeback trail now, right? So I suppose you could even take this box, and there you go. So it's just kind of interesting. Yeah, it's almost not, that box is too big there, right? I suppose you could still look at it and say it's bot, but the real bottoming pattern was kind of, more similar to ARC there. It was actually last year, I believe, we talked about that. And of course, once it broke out, it took another trip back in there into the box. So, it's kind of interesting. There's a few stocks out there that have some pretty decent patterns too, and of course, quick look at a couple of the mega cap Magnificent Seven. One thing I've noticed on these is that they kind of, like here's Microsoft's got kind of that, huge run up in November. It's got kind of that spike top there. I mean, it kind of looks like it wants to pull back. Amazon, you know, same sort of thing. Amazon's still quite a bit below its all-time high, but if we zoom in to and we just look at this year, Amazon's pushing the highs for the year. Um, Facebook, Facebook kind of in pullback mode. So, but I mean, look at that. That's pretty amazing. Google. Google got hammered on earnings and then just climbed right back up, but it's kind of rolling over a little bit here. And so, it kind of looks like an Apple, of course. Apple, just November was an insane month. And quite frankly, I don't know what everybody was, what the institutions were front running or whatever. Seems kind of like a short squeeze. I mean, back at the time, right, the market at the lows, like going into November, things were looking pretty rough. They were looking real rough, right? I mean, the market had kind of sold off in October, and it was pretty ugly, right? This last little sort of dip broke below the 200-day, and then just the reversal in November was just astounding, and best November in years. And so it's pretty outrageous. And so it is what it is, right? I mean, the market's just kind of hanging around, these prior highs from over the summer, and so it'll be interesting to see what happens. Um, a lot of it is based on people thinking that the Fed's going to pivot and or start lowering rates, which, I don't think that I don't see the point in them doing that. Be honest with you. I mean, unless things start to, and of course under the surface, there's all sorts of things that could potentially go wrong and or are going wrong. A lot of it has to do with interest rates on mortgages and all that kind of good stuff. But we won't get into all that macro stuff today. So anyway, I'm not expecting anything really dramatic between now and the end of the year unless there's some sort of, unless something happens that's not priced in. But what wasn't priced in was whatever it was that contributed to this insane run up that the market had in November. And all I can think of, I mean, basically you could there's probably, you could say something like, well, earnings were pretty good and this and that, but valuations are stretched, right? And everybody piling into the same stocks and that. So the question is now, is the rally broadening out? Um, with the Russell sort of on a tear. We haven't even talked about the Dow. So one last index here. The Dow is like literally practically at an all-time high. Right, like there's the all-time high in the Dow, and look at it here. It's not gonna take much for the Dow to hit an all-time high. Of course, that's nominal terms, right? If you want to take the all-time high, call it 37,000 in the Dow and adjust for inflation, my guess is the Dow's going to need to hit probably, almost 40,000 in order to hit an inflation adjusted all-time high, because we're going back a couple of years here. So, but anyway, it's, as you can see, we'll look at the weekly chart. These daily charts really noisy lately. I don't know if it's me or if the charts look different than the old days, but like I said, I'm kind of gravitating towards the weekly charts in my old age here because they just look a lot smoother and cleaner, and you can kind of they don't look as hectic and as noisy, I guess is a good term for it. So anyway, yeah, Dow close to an all-time high, right? It's got a little bit different of a sort of pattern here, kind of weird looking, but um, yeah. So we'll have to just sort of coast through the end, for the next few weeks towards the end of the year and see what happens. Barring any unforeseen, news, black swans, whatever. Seems like the markets just kind of hang around here, and then the most interesting thing will be to see what happens at the beginning of the year. So the beginning of a new year is always exciting. So as you recall, at the very beginning of 2023, back to the S&P here, the beginning of 2023, the market just took off, right? And a lot of stocks, like back to Apple or whatever, just 2022 was not the greatest year and sold off into the end of the year, but there's a lot of stocks, especially the Magnificent Seven, right, where like the year flipped over and then boom, these things just took off. Like everyone started buying them right at the beginning of the year. So it remains to be seen how that'll play out, when the year flips over again. So anyway, thanks for tuning in. I will see you back here, same time, same place next week.